Now, it feels like more than ever as of recently, there's more and more talk on whether a dividend-focused investor will be better off buying into something like JEPQ, the JPMorgan NASDAQ Equity Premium Income ETF, or ticker symbol GPIQ, the Goldman Sachs NASDAQ 100 Core Premium Income ETF. Or finally, one of my other favorites, QQQi, the NEOS NASDAQ 100 High Income ETF. Now, even though all three of these ETFs have some similarities, being that the NASDAQ 100 is definitely involved. There's lots of differences when it comes to all three of these ETFs, and some of them might offer certain things that you might like, and maybe some things that you don't like. So in this video, we're going to break it down. I'm going to make it very simple for you. We're going to go through all three of these NASDAQ 100 high income ETFs, which I personally am a huge fan of all of them. I'm going to go through and share with you guys what each one of these ETFs are specifically, how they work, what their own strategy and objectives are, etc. Then later on, towards the end of the video, we're going to figure out, or at least attempt to figure out, which ETF is the best for you specifically for your investment strategy, and what $10,000 or $100,000 of invested money will look like in all of them. So I promise you, if you're an income-focused investor that likes any of these ETFs, or like myself, likes all of them, you're definitely going to want to stick around until the end. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So let's start off with a very familiar face, JEPQ, the JPMorgan NASDAQ Equity Premium Income ETF. This ETF has been around for a while and is sort of known as one of the best premium income ETFs in the dividend investing community. Now this is because this ETF over time has paid a significant amount in dividends, but also has grown along with that and has been rather stable considering it does track the NASDAQ 100. Now, as promised, I want to go over the basic overview for all these ETFs, which for JEPQ, it says seeking consistent premium income with lower volatility. The JPMorgan NASDAQ Equity Premium Income ETF seeks to deliver monthly distributable income and NASDAQ 100 exposure with less volatility. The portfolio for JEPQ says underlying equity portfolio employs an applied data science approach to fundamental research and portfolio construction. Discipline option overlay implements written out the money NASDAQ index call options that seek to generate distributable monthly income. Now, all three of the ETFs, JEPQ, GPIQ, and QQQi, all pay income on a monthly basis, but they all pay different amounts. Now, JEPQ on one hand does not necessarily have a targeted payout amounts every single month, and the payout amounts over time since inception have been sort of all over the place. I mean, look at the last 12 months, we've seen payouts as little as 38 cents and as high as almost 56 cents, which altogether makes up around an 8 to 10% yield, which is not bad whatsoever. But again, for some investors like myself that sort of want to have an idea of what they're getting paid out every single month, this could maybe possibly be a con. Now, in JEPQ's overview, there's absolutely nothing that talks about the potential for tax efficiency or this ETF being tax friendly, which is something that a lot of people criticize JEPQ for. Although, to be honest, this is still one of the best ETFs in my opinion that utilize the NASDAQ and of course offer a lot of income right from day one. Now, to move into the next ETF, GPIQ, this is another one of my favorites. I do hold all three of these ETFs personally in my portfolio, but this is of course the Goldman Sachs NASDAQ 100 Core Premium Income ETF, which has only been trading for a short amount of time, but has already done very well. And from what I've been hearing and seeing in the community of dividend and income focused investors, this ETF is quickly becoming one of the favorites. Now, this ETF's overview is seeks current income while maintaining prospects for capital appreciation. So what this basically means is that this ETF is going to do its best to seek current income, but also sort of along with that, this ETF has prospects and the managers want the ETF to grow. Now, it says reasons to consider: seeks consistent monthly distributions, aims to generate consistent monthly distribution rate, generally from option premium and equity dividends. So this is already where this is going to be different from JEPQ. This ETF is trying to seek a consistent monthly distribution, which, like I said, for me personally, maybe you guys might disagree, but that's very important, especially when you start stacking hundreds or thousands of shares. You want to sort of be able to at least imagine what you're going to receive on the future months. It then says core equity exposure with lower volatility, provides core equity exposure to the NASDAQ 100 index, and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. Now, just as a side note, I have went over all these ETFs on their own in deep dives on my channel, so check out some other videos if you guys want to see that. And I say that because this ETF in specific offers a very interesting strategy with the dynamic selling of covered calls, meaning that if the market plays nice, there actually is a potential for some significant capital appreciation, even with an ETF that seeks consistent distributions monthly that are pretty massive. Now lastly, it's a diversifying source of income, seeks to deliver attractive income with a lower correlation to traditional income sources and their risks. Now, I forgot to mention, but I do think it's important, JEPQ's expense ratio is 0.35%, where GPIQ is sort of undercutting that a little bit at 0.29% net expense ratio. Now, again, this is just my personal opinion, but that's a very, very cheap expense ratio, especially for the strategy and the management that you are getting exposure to for a GPIQ, which is sort of just a bonus. Now, we talked about JEPQ's income and how it's not necessarily all that consistent, although it's still pretty good. GPIQ every single month, more or less, pays out around 41 cents, more or less, give or take, which is nice because although this doesn't mean that it's going to for sure happen. As an investor, every single time I personally buy a share or two, a GPIQ, I sort of imagine the fact that I'm going to get paid around 40 cents per share that I purchase within the next month or so. And that sort of just gives me a nice motivating idea of what I can at least possibly be receiving, of course, over time as I stack more shares. Now, we're also going to talk about the performance of all three of these ETFs towards the end of the video, so don't worry, we're going to go over that too. But the last ETF that does utilize the NASDAQ 100 also and pays out a boatload of income, another one of my favorites, QQQi, or the NEOS NASDAQ 100 High Income ETF. This ETF offers a monthly distribution also, like I said, an expense ratio that's over twice as expensive compared to GPIQ, so that might be something to consider, but a distribution rate of over 14%, meaning that this ETF out of all three offers the most distribution, at least it has historically. Now, the targeted benefits for this ETF, it says number one, the fund seeks to distribute high monthly income, generate from investing in the constituents of the NASDAQ 100 index, and you guessed it, implementing a data-driven call option strategy. Now, this is where this ETF really shines, in my opinion. This ETF is trying at least to be tax efficient by seeking to take advantage of tax loss harvesting opportunities, in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, at times, this ETF is also going to both sell and buy NDX index options, which may provide opportunity for upside capture in rising equity markets. Now, I know some investors watching this video are not necessarily super concerned with upside. A lot of you guys might just want a boatload of income and no NAV decay. And honestly, all power to you, that's perfectly fine. But all three of the ETFs that we talked about in today's video, all three of these ETFs have the potential for some upside, which is nice, but also pay a boatload of monthly income right from day one to investors. With QQQi, we're talking around 60 cents, more or less, is where we've seen this ETF pay out over the last year or so, which is a massive amount of income considering the ETF costs around $53 per share. Now, with ETFs like this one and like the other two that we talked about, this is where investors can at least potentially invest a relatively small amount of money, see their portfolio grow over time at least a little bit, but also potentially use those distributions and dividends on a monthly basis to help pay for things like bills, or just reinvest those into more and more shares and compound your portfolio. Now, I promise we're going to talk about performance. JEPQ on one hand has around 54.3% return since inception, where GPIQ has a cumulative return of around 36% since inception. Now, QQQi has around 23% return since inception, but keep in mind also, all three of these ETFs have been trading for different time frames, which is why I sort of thought it'd be helpful to stack all three of these ETFs on each other and see what their total return has been over the last 365 days. Now, again, it's pretty obvious that all three of these ETFs have similar strategies because, I mean, they trade almost exactly like each other, or at least have over the last year or so. Now, all that to say that over the last year or so, using total return as a metric, all three of these ETFs have returned around 22%. So where do we go from here? Which one of these ETFs are the best ETF to buy into? Let's say a $10,000 investment, a $100,000 investment to earn a boatload of income right from day one. Well, my answer to that would have to be it really depends on what objective and strategies you sort of match best with when it comes to all three of these NASDAQ 100 covered call style ETFs. And maybe for some investors, it could be the fact that there might be more upside with one of the ETFs, or maybe one's a little bit more tax efficient, whatever the case might be. But for me personally, I own all three of them and intend to do so long term. So now that we talked about JEPQ, GPIQ, and QQQi, we went over how every single one of these ETFs work, how they've done as far as performance since inception, and everything else in between. I want to hear from you guys down below. If you were only able to hold on to one of them for whatever reason, which one of these three would you buy? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.